Hey everyone, Dan here. We are after market close on Friday, July 2nd. We're going to do that Friday thing and take a look at AMC today. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps a lot. And also, if you'd like another way to stay in touch or for me to send you trade ideas, signals, things that I see happening in the market, I'm going to put a link to a Google form below where you can put your email in. And as soon as I get 100 folks on that email sign up, I will go ahead and start crafting what the newsletter will look like. That'll probably take me a month or two to just sort of like lay it out and figure out what it's going to be. And then I'll plan on sending it out once or twice a week at the most, so it'll be pretty low impact on your inbox. And I'll give folks a chance to opt out if, by the time it's actually coming to pass, they are no longer interested. So toss that in there if you want to help me get to 100 so I can start to sort of think seriously about putting it together. All right, so here's AMC for today. We're mostly going to focus on the data today, but We'll do the data aspect first, and then we will go ahead and pop over and look at the chart. There might be a little bit of back and forth as we go through the data, but pretty solid volume today for Friday, though. The 3-month average has been 153 million. So it seems to be like quite low today, but for Friday it was pretty solid. A bunch of growth stocks, a bunch of stocks that have had really good periods recently got hit pretty hard, at least in the first half of the day today. So we definitely see that following suit with AMC. Let's flip over to the data, and like I said, we'll be back and forth a little bit with the chart because I want to show some price ranges and some dates at which some things played out, and we'll sort of like look and see what happened on those dates. I don't know why I can't get this to... Okay, there we go. Oh, 15th try is the charm. Okay, let's pop this out for a month because that'll help us flip back and forth to dates. I know the chart's messy for the time being, but we'll fix that in a little bit. For now, don't worry about it. So AMC, the daily short volume ratio that we're getting staying pretty high, really high all week. Ratios in the 20s are pretty like attention grabbing. In the mid to high 20s is very, very high. In the 30s is bananas. So spending 2 full days in the 30s today, back to back with the day previous to that being nearly 30. I mean, this is incredibly strong volume of shorts coming in from the 28th through today. And, all of this, you have to keep in mind the backdrop, and I'll mention this again when we go to the Ortex data because it can feel quite skewed. So like, it might feel like some of the ratios and some of the percentages of the short interest are low in AMC relative to how like hyped the short squeeze in the position is. But you have to keep in mind that if retail owns like 80% of the shares in AMC, then it makes this type of ratio nearly impossible. Because like on this day, for example, you had 99 million shares of short volume. And so the idea being that of the free float, I think it's like, I'm going to get myself into this situation again. I should have looked this up elsewhere. But shares out, free float, 500 million. So if retail owns, say, 400 million of that, then that means that the remaining 100 million were basically all short volume in shares on one day, being June 28th. So just think about how either insane that is and or how just impossible it is. Meaning, we're back to the whole synthetic shares question. Are there a bunch of shares being sold into AMC that don't actually exist, aka naked short selling? So folks are buying shares that aren't actually being delivered, we'll get to that in a minute, or are being delivered at a much, much later date. And so what's sitting in their account technically is an IOU for a share of AMC that can't be delivered immediately, like at least in T+2, because it didn't exist in the first place, hence the naked short selling of it. Now, if we come down here and take a look at the fails to deliver data, you see huge numbers here at the beginning of June. Now, 30 days after a fail to deliver comes a time frame which is called an aged fail. Now, an aged fail is a fail that's not been settled 30 days after the trade. So you paid $50 a share for your AMC shares. That money left your account immediately. You then, just by the nature of technology today and your brokerage, you're seeing those shares in your account. But what's happening in the background is they're waiting for that delivery to come in from whoever you sent the money to. So the person you sent the money to is waiting to technically receive it, to truly receive it and realize it, and then you're waiting for them to send you the shares and realize those shares in your account. Now, to the extent that that latter thing doesn't happen, the shares never actually come to you, it appears to you as though you still have these shares of AMC. You don't know any different. 30 days after the fact of that fail to deliver to you, though, it becomes an aged fail, and an aged fail then triggers specific charges by the SEC to cover counterparty risk, so fines and fees and penalties and that sort of thing. And so in order to not have to incur those, whoever failed to deliver could, leading up to the 30th day, purchase on the open markets and deliver those shares to you that way. Now, in that case, what could happen is 30 days after June 1st was July 1st. So this entire week, what we would have been seeing was some buying pressure coming in order to deliver, to accumulate shares to deliver these millions and millions of shares that needed to be, that I guess technically would have needed to be settled by today. So what I look for is a few days before 6/1, before 7/1, which would be 30 days after, look for buying pressure to pick up for these folks who need to purchase on the open market in order to deliver. Again, this is speculative. I don't know what, if any, percentage of these actually fits that category. But to the extent that it does, if we flip back over to the chart and look at the days leading up to July 1st, which would have been that 30th day. So here's July 1st right here. Okay, and we do see several days of really big green upticks followed by selling off. So my, hypothesis here, even back in 6/17, that wouldn't be crazy far in advance, because you have to remember, for them to do all this buying, they need to buy millions and millions of shares. So they very well may spread it out over several days, right? And so this could have happened, started back way back on 6/11, after the price had been shorted all the way down to what maybe they felt at that point was a really good price. So they would have sold these shares, they would have sold these shares on 6/1. Look where the price was when there was all these fails to deliver happening. The price was rocketing up, right? This is 6/1 through 6/4, and then really also pulling in 6/8. So 6/1 through 6/4 is this huge run up, okay? And then 6/8 is also when it had peaked back up here after it had tried to rebound from that sell-off. And so on these dates where the price is the highest, there is also the highest amount of shares failing to be delivered. So people would have bought shares in the 70s, say, and then they were failed to deliver. And then what happens, say about 30 days later? So about 30 days later, we're in here, 15 to 30 days later, as they start to accumulate shares after shorting the stock heavily down. Then they can buy, so they sold you a $70 share. Now they start buying shares in the 40s to actually deliver to you. So do you not see the craziness of, they already received the money at $70 a share from you, but they haven't actually sent you the share. So they're making the difference between the 70 and the 40 on every share that they're then purchasing on the open market and delivering to you several days later. And so this thus amping any potential profits from this activity, plus profiting from shorting it in between and potentially selling more shares into the market to distort the supply, and failing to deliver on those, and then just dealing with it later on. So you then see several days of pretty heavy buying, which could partially be spreading out of buying in advance of needing to deliver on 7/1, and then doing so. And so I would really continue to watch out for this, especially as we see price spikes like we saw here and fails to deliver that also spike. Look for immense short and distort campaigns coming in to drive the price down, and then big, like seemingly, I don't want to say erratic, green motions, but just sort of like out of nowhere, just like really big, areas of green, candlestick after candlestick after candlestick, driving the price up pretty rapidly. That's probably the right word. Again, I would say partially fueled by the extent to which any of these millions and millions of fails to deliver were naked short selling playing out in real time. Okay, hopefully that made sense, because that was sort of like the big thing that I wanted to look at today. I think we should continue to be very vigilant of these. Obviously, there's another date coming up on 6/8. I would suspect that those have already been accumulated, because by the time the market opens again, it's going to be the 6th. So if anything, I would say there's going to be a ton of buying on the 6th if there is a large percentage of these that haven't yet been already accounted for, or that were short sold and still haven't been purchased on the open market. But again, this number, while it does seem large in the vast scheme of AMC, isn't. But the cumulative amount of shares here is a very large number. So keep that in mind. A couple of things to look for is how do you have a volume of 99 million if retail owns 400 of the 500 million? And then, these huge fails to deliver. So it'll be interesting to see if, like on a day like this on 6/28, when we get that fails to deliver data, if there's a big spike on 6/28, 6/29, 6/30 of fails to deliver happening. Was it 29th and 30th weekends? I can't remember. But whatever the trade dates, on that day and the couple of days following are. Okay, so on the other side of things, supply for AMC to be borrowed still staying pretty low. The fee also staying low. But, I don't think a lot of this is happening on the open market. I think a lot of it is happening behind the scenes, and also is happening sort of like in a naked short kind of situation like we were just describing. Yeah, we'll talk about that more another time. But here's on the Ortex side of things, percentage of the free float on loan, currently 18.68. Cost to borrow, as we see, pretty low. The utilization very high. So there's only about 14% of the shares that are available to be lent that are able to be borrowed. So 86% of all available shares to be borrowed currently being utilized by short sellers to do so. Ortex estimates today short interest percentage of the free float to be nearly 18%. Again, that is very high, but I think in the context of like all of the hype and craziness around the short squeeze and short information around AMC, that could seem low. It could be like, whoa, with all the hype, I thought this was going to be like 70%. But you have to keep in mind that, again, if retail owns 80% of the shares of AMC, then this being nearly 20%, that's basically everything else. Again, accounting for the utilization being very high. So I would just keep those things in mind, just sort of like understand the lens through which we should be looking at these things as they pertain to AMC. All right, well, that will do it for this video. I'll share some things out as it pertains to the chart, because I know it fell through this 5088, though it has now come back and regained at least price action over there. The question will be, can it get support over there? But again, a lot of AMC is not necessarily trading super technical, though we do see it constantly hitting these price zones and price targets and finding support and resistance exactly at these zones. So I do think that the chart plays a role. We did see it wedge out pretty hard here, so this fall out was really hard. This rejection off of the upper end of the flag was really hard. And so we did see that big movement out of that flagging pattern that we had identified previously. So there is something to this, but I think that this video being more focused on the data and how that interplays with what we're seeing in the chart, I think is probably the more important thing. I'll put out another video maybe over the long weekend, just sort of like focusing on the chart to begin with and then supplementing in some of the data as well. All right, well, thanks a bunch for watching. If you found this interesting, feel free to share it on Reddit, Twitter, Facebook, wherever you share or talk stock information. I would appreciate it a ton. All right, well, enjoy your weekend, and I will see you in the next video.